Good morning, traders. Today is July 8th, and the time is 8:43 a.m., and we are making our daily recap for the day. Now, we locked in $1,008 in 8 minutes of trading. And let me break down what happened today. So today is going to be a relatively quick recap. We're just going to break down the trade I took, the one trade I took, the one ticker, and what I thought going in and how I planned my entries and exits. So the trade that I took was WFF. Initially, when I saw the stock gapping up, it went from about 250 to about 340. Okay. There was no real catalyst on this ticker. It went up on absolutely no news. There was no catalyst. And all I did was wait for the fade, wait for the breakdown, shorted and covered. So I covered in the 230s. In hindsight, looking at the stock right now, I am feeling FOMO because it faded a lot more than where I exited. But it's important to know that we locked in $1,000. We are out, and this is not what we expected at the time. So we can't really expect the same profit. So let's break down what happened. On the fade, I saw this huge rejection candle. It went to 340, reject $3, came down really fast. Initially, what I was thinking of was I want to short in the 280s to $3 range. But it broke through it like butter. It pushed, came back down, held $3, pushed 340, broke this high, and immediately, within seconds, on very low liquidity, it cracked $3. Now, when it cracked $3, I want to take a short of the 280s. And this is the reason why. There's a mini consolidation here above 280 to 310 maybe. But this little consolidation on the daily occurred on no volume at all. There was no volume here. So although it's technically a daily breakdown below this 280, I didn't even consider it. I didn't even consider the daily breakdown aspect of it. I just wanted to get in because, first of all, there's no catalyst. Second of all, this grind happened on no volume. Since the reverse split in April, this ticker has been grinding up also on no volume. So what is the most highly probable explanation for this move today? It's a liquidity sweep. It's a liquidity grab. Some people, someone, some institution, some party has a lot of shares that they need to unload for whatever reason, and they need to create a liquidity event to exit. They can't do it on this grind. They can't do it when there is no volume, when there is no liquidity. And it's very obvious. Look at this candle here. This push versus this rejection candle. It was more than double, 1.42 million shares, and the push was only on 400,000 shares. So this push trapped a lot of early momentum traders and early short sellers. And this drop, this hammer, dropped from 4 times the volume, almost 5 times. This was the liquidity event that they needed to exit their position. First, they broke the wick, they broke the top, trapped breakout buyers, trapped more long traders, and then they dropped the hammer. So when I saw this, I couldn't really get in at the spot where I wanted. I actually put an order at 272, I believe. Not with the intention of actually shorting at 272 because it was trading higher at the time, but it hit SSR. So when it hit SSR, I knew there was going to be a ton of slippage. And because there was going to be a ton of slippage, I reduced my position size to only about 1,500 shares. I knew that if I was right and it breaks 250, we got a long way down. So that's what I did. I shorted, and I got filled at such a bad average. I kept having to bring down my average because it was moving down so fast. I think my first entry was at $2.68. My second entry was on the breakdown, or at $2.60. I think it was on this candle right here. So short near the bottom of this candle, add on this candle, and my risk, 280. I wasn't super confident in the setup because it happened so fast, and it was SSR. Anytime there's SSR, I generally expect some level of churn just because short sellers can only short on the uptick. So if there's a lot of momentum and short sellers can only short on the uptick, I expect it to move up before it comes back down if it's truly weak. Similar to CETX a few days ago, but that's what I was expecting. And I didn't really want to risk a whole lot of money on this ticker because although it fit my setup, it wasn't 100% perfect match. And I'll explain why after. But that's my trade. Shorting the 260s, I got out around $2.30. On this flush, I exited my entire position. Now, it's trading at $1.75, and I mean, I do feel a lot of FOMO, but I don't regret what I did. I think the right thing for me to do was to take partials, maybe 2/3, and hold the remaining 1/3 for the continued breakdown. Because I did expect this to fade to about $1.90. I just wasn't too confident and I didn't want to take any additional risk on this ticker. Because if you look at the daily, okay, this grind happened on no volume. There was absolutely no volume associated after the reverse split in April. Okay, so if we look at the volume candle, so the volume is right here. Okay, I'm just gonna glide through the dailies. Okay, we're looking at like what 2,000 shares here, even 20, 30, 10, 22, 28. Very, very low amount of volume in this grind. So there might be some traders who will try to convince you that, hey, if you bought it down here, you could have made 300%. And I'm going to tell you right now, that was not possible. There was absolutely no way for you to profit from this grind. And I'll explain. So let's go back to my actual platform. I use TradeZero. Okay. The reason why I exited this position at 230s and the reason why you could not have profited from this grind is because of these two candles right here. If you look at the volume, which is right here, the V, I'm going to just make a little circle, 107 shares. This stock dropped about 30 to 40% on 100 shares. Same with this candle. 3 shares. 3 shares. How could you have traded this? Could you have made 300%? Yeah, of course, if you buy 1 share. But when I saw this on this low volume, I did not think traders were going to honor this bottom at $2. I knew from my stats that after this 240 broke, the average fade was about $1.90. So in my mind, I'm thinking $1.90, the bottom here is $2. If this breaks below $2, I can probably get out in the $1.90s. It fits my stats. It fits this bottom, I guess. But I really did not like the SSR aspect of it. I thought that after this huge push and fade, I didn't know and I wasn't confident enough to hold on to it. Now, even if I did, I wouldn't have gotten out in the 170s. There's just no way. Unless like I have so much conviction I can hold the entire position. But again, I traded with really small size today. So when I got my 34, 35 cents, I was extremely happy. I wasn't looking for more because not all my criteria lined up for me to hold it longer. Generally, I really like holding these fades because it's basically free money. If you have stats that tell you where it's going to go, why not hold it? If I lack the understanding of where I think this stock is going to fade to and the reason why, if I can't justify it to myself, I have to lock in the money first. With a small account, you don't want to look for the maximum move. It's really nice if you hit it, but if this starts reversing and I give back the $1,000, I got to start again from square one tomorrow. Not every single day will you see something like this. It does frequently happen, but I already took the risk. And because I took the risk, I want to be paid for it. And I got paid. I just could have got paid more. So that was my analysis. That was my recap. That was why I didn't really get out at a lower number. I really wish I did. Even at this $2, I was really tempted to even short this breakdown. I think I even if I did, like I had like 600 shares ready. I was like, well, let's just see if I can scalp a little bit more. I would have made like $150. It wouldn't have been much, but I mean, I generally try to get better entries and hold longer. That's generally the better move rather than trying to chase all these breakdowns, especially with SSR. When the stock hits SSR, I generally just do not like trading it. When you can only short on the uptick, when you expect some level of churn, you don't know where it's gonna go. And if you cannot predict where it's gonna go based on your stats and your understanding of the move, then if you're up, try to take some profit. Now, if you look at the stock right now, I honestly think this will probably fade back down to the $1.20 to $1.40 level. And the reason is because this entire move, or this entire move today, was a manufactured liquidity event for people to exit. And they got what their move, they got their shares. I mean, you look at these candles. It's so crazy. On Trade Zero, it's only reporting about 250,000 shares, 250,000 shares on the uptick. But on this big red candle, 900,000 shares, almost 4 times. They got their move. They got the liquidity event. Now this thing is going. It is going to go back down below $1. I don't know when, but it will. This move here was a reverse split, made and manufactured to comply with Nasdaq requirements. It was probably because of the below $1, to be honest. But I don't know the exact news. I'm not going to dig into it. It's just, I mean, look at that. So, anyways, that's my recap for today. I hope you guys learned something. Hope you guys enjoy the video, and I will see you guys in the next one.